We begin this week with an archival photo from the Bank of England taken in 1968. The then gold price rigging London gold pool, which operated from 1961 to 1968, saw an overabundance of market forces and gold bullion withdrawals that ultimately led to its collapse that same year. The spot gold price proceeded to multiple 24 times following its once $35 an ounce price rig by January 1980. We'll cut to now in January 2025. The global gold trading jurisdiction, the City of London and the Bank of England, had to again address the media yesterday regarding the gold withdrawal delay story ongoing in financial news headlines.
Hi, Yasha Popovic from Central Banking. I wanted to ask about gold, given it can act as an inflation hedge and the current liquidity stress in what you said yourself last week is one of the world's major markets. So how much gold has now left the BOV vaults in anticipation of tariffs? And with bullion banks looking to borrow from central banks that hold their gold at the BOV, what is the central bank doing to help alleviate current queues?
Dave, do you want to?
Yeah, I think I picked up the question. And look, there's, it's worth, given that this is the NPR press conference, it's worth putting what's been happening to gold, which is the detail of your question, in the context of what's going on in the world economy and the uncertainties out there. And, it's also worth bearing in mind that, because this helps explain some of the facts around the time it's going to take to get gold out of the bank's vaults, because of the nature of our approach to the gold. So, the first thing to say is, and I think this is broadly known, but we have the second largest stock of gold in the world. Over 400,000 bars of gold at the moment. That's gone down a bit since the end of 2024, reflecting the market conditions that you're talking about and have been a feature in the news. But the stock has gone down by about 2% since the end of, so that's important to keep that in perspective. And the US gold market has been trading at a premium to the London market. And commercial gold holders have been looking to take advantage of that price differential. So there's been strong demand for delivery slots. We can meet that demand. All of our main counterparties, as it were, or better to say, all of those bodies who ship the gold have, they've all got the delivery slots they need over the next few weeks. If you were coming in new to us, you might have to wait a bit longer because all the existing slots are booked up. But this is a very orderly process. It is worth stressing compared to some of the markets we usually talk about. It's an obvious point. But, gold is a physical asset, so there are real logistical constraints and security constraints. Getting into the bank for me this morning was a bit trickier because there was a lorry in the Bullion yard. That's how it. But that's just the reality of it. It takes time, and the stuff is also quite heavy, as you know. So. But I think these things sometimes get forgotten about in a headline that says, there's a 6-week delay or something like that. There's a lot of demand, but we've got slots for all the people who currently want to get their gold or want to ship gold on behalf of a customer, and we're managing it.
So we've gone from Bank of England governor downplaying the story, basically stating gold is now unimportant, yet also London is a key leader of the global gold market still. And now we're managing it, it's orderly. The Bank of England bullion yard was jammed with an armored lorry this morning, and gold bullion is heavy, nervous laughter. So last week's threats of Trump 25% tariffs were called off earlier this week against Canada and Mexico, but they were applied now 10% tariffs on imported Chinese goods. The reportedly 800,000 400-ounce gold bars are being pulled out of London. It's hard to say how much of a percentage of the available guesstimate turquoise-colored float stash that represents. And some entities obviously own those gold bars, and it's not known at all how many are in the mood to sell at the moment. The rush for pulling available 400-ounce gold bars from London to then refine into smaller 100-ounce and 1-kilo gold bars, often in Switzerland, piling on more time delays and bottlenecks, then getting over to the United States gold futures warehouses slowly moves forward under spiking lease and forward rates. Polling other onlookers, the majority polled feel it's hard to say, given the opacity of the London gold market and the global gold market at large, what's really going on. The reported flow of gold into Comex warehouses continues on. The largest warehouse now in the gold Comex system is Brinks, New York, having added something close to 9 million ounces of gold inflows into the depository of late. Even with supposedly adding around 400 million ounces of gold recently, no longer is JP Morgan the largest gold Comex warehouse. And we're going to touch on them along with other unsecured gold and silver ETF APs shortly. Raw U.S. data, importing data, shows potentially just over 13 billion of gold and precious metal doré inflowed recently. And the LBMA updated their gold-silver inventory figures for last month, January 2025, early today. While close to negative 4.8 million ounces of gold was pulled. That's like 12,000 of these 400-ounce gold bars. For silver bulls, the most shocking figure was the reported negative 71 million ounce silver bullion pull from London in just the last month alone. That's the largest monthly pull on record since 2016, when the LBMA dipped a toenail out of the opaque waters of their collective non-transparent market. That was following the London gold-silver price fixing scandal of the early 2010s. Now, a quick aside slide. Rolling price data right here shows London gold AM and PM price fixing crimes painted on this rolling 24-hour gold price chart here. This one runs from 2006 into 2012. And if you study it, you'll see that there's obviously price dives right before front-running the AM fix and the PM fix, and surely the insiders of the Cozy Club were getting bonus out of it. If you're late to this ongoing saga, take a look at how average gold prices would tumble every day. Basically, the gold price has been suppressed for decades. Now back to this record negative 71 million ounce silver pull from London last month. Well, that's like 157 of these nearly each 1 metric ton silver pallets, stacked with 31,000 ounce industrial sized bars, whisked away in 1 month. Semper Vigilantes tweeted, "Imagine, if you will, a world where 71 million ounces of silver, that's 4.4 million pounds, is able to be transported successfully out of London vaults in 1 month's time. Except in this world, it takes 4 to 8 weeks to handle a mere fraction of that weight in gold." I sarcastically responded, "Valid points you raise. Surely the negative 71 million silver pull was but one market clearer who pulled up in a container ship, whilst the market clearers for gold are 50-plus parties who rotate once daily in for tea and crumpets, jamming up Sir David's bullion yard with their armored lorries." This week, former Sprott trader Kevin Bambro published an article on Twitter recounting the 2005 to 2007 period when they took delivery of a significant portion of silver via top-tier commercial bank certificates. And what was promised to be a 5-day delivery period turned into a 9-month saga of myriad excuse-making before the final deliveries were completed. Longtime precious metals desk trader Robert Gottlieb stated today, "LBMA stats are out. Silver stats are more concerning than gold, which translates to silver market more dislocated. Remember, there isn't a lender of last resort like gold." Central banks, end quote. Actually, I'd beg to differ, and so would Jeff Curry, former head of Goldman Sachs commodity desk back in Q1 2021 Silver Squeeze interview.
The shorts are the ETFs.
Well, the short interest in SLV exploded higher this week, and so did two borrowing fees spike in both GLD and SLV to extremely high levels. Now, my bet is the APs of those respected poor gold and silver spot price proxies are pulling out bullion bars to help tamp down exploding physical demand the world over. If we can just back out at this chart and look at SLV borrowing fees, we can see the last time they spiked so high was September of 2022. Roughly August, it looks like. Basically the same year India was importing then record high tonnage of silver. Just after the then SLV borrowing fee spike in 2022, just under 1,000 tons, or close to 30 million ounces of silver, left London, likely much of it out of SLV back then, and likely similar SLV raids for bullion are ongoing right now, with it eventually heading to London as well. Cup meat handle. Silver appears to be rounding up for the eventual run to and then eventually beyond ancient nominal price high 50. It's almost already there north of Canada already. Net asset values of ETF market shares and unsecured ETFs are currently now only about 1/10 versus where they were in the last run to $50 an ounce nominally. So you can see how underowned and how underappreciated silver is right now as it coils behind gold. Yet as recent as last year, we got BRICS nations like India literally yanking 100 tons of gold reserves out from the former faded colonial power Bank of England's basement. And now we have a run on London gold and silver bullion holdings by myriad parties to begin the year 2025. Central banks now confirm 3 years in a row buying official gold bullion at an over 1,000 ton per year clip. This is unprecedented. It's never happened before. There's never been this much official gold buying. You have to go all the way back even to World War II. Never in this size and volume. After this short break, we'll get into building speculation that the current Trump administration is considering using the spot gold price release valve to, quote, make America great again and bring about a so-called return to our former golden age. More on that after this short break.
Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates.
And be sure to visit sdbullion.com/sweepstakes to enter our free 500-ounce silver coin giveaway.
What's better than an ounce of free silver? How about 500? Get ready for another monster-sized giveaway with the SD Bullion Monster Box Sweepstakes, featuring 500 of SD Bullion's very own Silver Tree of Life coins in a monster box. This highly detailed piece of silver is a beautiful addition to any collection, and it features a hidden inscription on one of the tree branches that changes every year. So don't miss out on this exciting silver giveaway from SD Bullion, because someone has to win it, and it might just be you. Click the link below for your chance to win.
The spot silver and gold markets traded up again this week. The spot price of silver and fiat US dollar ended at 31.80 cents an ounce bid. The spot gold price closed at 2,860 an ounce bid. The spot gold silver ratio ended this week basically flat at a still historically high and stubborn level of 90. Speculation that the USA may be moving policy towards release valving the nation's gold reserves, marking them more to market as gold prices climb higher in value, to better balance deficits and create a more multipolar world in which the fiat US dollar remains reserve currency, with allies buying our debt in more of a long-term duration to sustain the system for longer. The article's author, Gillen Tett, backlinked various think tank pieces parsing out ideas for how to get about doing this, starting with threatening any and every ally with tariffs and using the current fiat US dollar debt system as a weapon to gain compliance akin to what we saw with our neighbors both north and south last week. Well, the gist of the article, which I'll backlink in the show notes below, is yes, we want to weaken the US dollar over time, but perhaps in a Mar-a-Lago multilateral accord, we will have agreements with our allies, and particularly to gold, we are definitely going to be losing purchasing power. But that doesn't mean our powerful seat at the world table fades akin to the purchasing power of our still dominant currency. That will be all for our weekly SD Bullion market update. And as always, to you out there, take good care of yourselves and those you love. If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.